Welcome to This Week in Money. I'm Jim Goddard. Today, Chartwork CEO Ross Clark tells us what the market's reaction was to Trump imposing steel and aluminum tariffs on Canada, Mexico, and Europe, and the Canadian government taking over the Trans Mountain Pipeline. He also comments on the Nasdaq and Russell 2000 hitting new highs. Trends Journal publisher Gerald Celente warns about the political turmoil hitting Italy and other weaker European nations. He talks about where he believes gold is heading in uncertain times. Editor of the popular blog Juggling Dynamite, Danielle Park, says it's time for people to get a handle on their debts and perhaps engage in a more affordable lifestyle as interest rates are expected to continue to rise. Plus, at the end of the show, we'll have a company showcase update from American Manganese CEO and President Larry Reaugh. We'll talk to Ross Clark right after this.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Chartwork CEO Ross Clark. Welcome back to the show, Ross.
Nice to be back with you, Jim.
Was there any reaction in the markets to the federal government taking over the pipeline project between Burnaby and Edmonton, and B, all the tariffs that Trump has slapped on steel and aluminum?
Well, I think in terms of the federal government now has managed to get even more people upset with them. There are those who didn't want the pipeline to start off with, and that group is becoming more enraged. And then there's a group that looks at it and says, why is the federal government spending money and then looking to sell it off once it's up and running, or at least close to up and running, when in theory it's supposed to be a profitable operation? So I think you're getting more and more people upset as far as the government is concerned. The intervention wasn't done early enough, and then when it was done, it's become a bit of a mess. But in terms of the market, it really didn't have all that much in terms of a reaction. You take a look at the pipeline companies. Yes, Kinder Morgan had a little pop, but things like Enbridge pretty much held its own second half of the week after the announcement came out. And regarding tariffs and the U.S. now moving ahead on Canada, Mexico, and Europe, the reaction here along the lines of what we've been mentioning the last couple of times, that they've made moves. There was the original announcement back in February that got big market action. Then there was the Chinese talk from Trump as we were in March, and you got about half of the same reaction to the downside. And in terms of the announcement on Thursday, market has really totally shaken this off. It's that whole question of, is this just a matter of Trump's negotiating style, and when he wakes up at some other day down the road here in a few months, does he change his mind again? So I really question whether the market believes that the current tariff numbers and percentages that have been put up will actually stay in place. So the market still has an upside bias to it, being led by more the domestic stocks, as we've been talking about, that the Russell 2000, the small caps, have been outperforming the big caps just significantly since the February break. I mean, here we are a week and a half ago. Russell 2000 makes a new high for not just the year, but a new high all around. A small, like normal 2 to 4 day pullback is what you'd expect. And we did have an outside reversal day a week and a half ago on the Russell 2000, so that was a new high for the move, closed below its previous day's low with a lower low. So we got a bit of a shakeout, but it held extremely well. The IWM, which is the Russell 2000 ETF, held above its breakout level. And then by the end of this week, it's back to new highs. And going along with it, you got the technology stocks, you got the Nasdaq right back to its high, medical services, the long-term health cares, and most of the FANGs, Facebook, Amazon, Netflix, Google, doing very, very well at this point. So you've got a market that's got some leadership in it. And for the broad-based markets, the industrials, they're lagging behind a bit.
Is there still a lot of excitement about the marijuana space right now?
Yes. You take a look at a stock like Canopy, which has made 3 really good runs historically. You had the run into 2016 and a pause, another one at the into the early 17. And then one into the early part of 2018. The consolidation phase after each one of these has been very, very similar in style. And the recent action leading up to the listing of Canopy on the New York Stock Exchange, when it rallied, I guess, from 32-ish up to just under $40 Canadian, and peaked right on the opening of the day for the NYSE listing. That was a very good resistance line. And as a matter of fact, on a logarithmic chart, it's the same style of resistance that we had prior to the previous breakouts in the bull market that's now the better part of, 3 or 2.5 to 3 years old. So we're right up against an important resistance at 40. We're pausing here, holding. But if it starts to push up, if it can hold this $34 Canadian and push through 40, it's probably ready for its next leg on the upside.
Ross, precious metals, are they doing anything, or are they just churning in the same spot?
The dollar and the gold market were universally strong there for a week or so. Gold got up over 1,300, but that recovered about half of the loss that we had in the previous couple of weeks. It is definitely having some trouble here. That's 1,300 to 1,305 because it's fighting the strength that we're seeing in the U.S. dollar. From our perspective, still trying to create its long-term base, and that 13.25, 13.30 should now be considered to be a very, very important resistance. On an international basis, the Europeans are looking at gold having broken out of a really nice base here because they've had such a weak currency. So gold's doing what you want it to do. It's moving up when your currency or your government or whatever is having difficulties, and it's maintaining its value for those who need it. And in the case of the Europeans, they're getting nice action. In terms of the U.S., it's in just a trading range, and in terms of Canada, we're in the upper quartile of our trading range because we've had a weak dollar. So, you want gold there as an asset that can protect you in bad times. And right now, there's no real bad times in the U.S., so I guess we're stuck here trying to create this longer-term base.
Ross, is there any concerns that the currency crisis or crises that we're seeing in Argentina and other nations like that, Venezuela, will spill over into what I would call the mainstream?
Well, and I think, you want to add Italy into the list of countries in there as well. it all gets down to what the services they are providing internationally, what debt levels they've taken on that become vulnerable to the North American banking systems. Those things you tend not to know until you're well into the move. Typically it's that little fly in the ointment when one market starts to feed on a next. This one, it's got the potential to create some problems, but when you look at the credit markets in the U.S., I don't see too much of a problem coming across just yet.
Ross, thank you so much for being on This Week in Money.
Be with you next week, Jim.
My guest has been Chartworks CEO Ross Clark. Coming up, Gerald Celente, publisher of the Trends Journal, next on This Week in Money.
Always consult your investment professional before making any investment decision.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Reaugh shear zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
Vatic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm speaking with Gerald Celente, publisher of the Trends Journal, available online at trendsjournal.com. He's speaking to us from historic Kingston, New York. Gerald, it's great to have you back on This Week in Money.
Well, thanks for having me, Jim.
Gerald, are emerging markets in big trouble?
Yes, they are. They're already in correction territory. They're stock indexes. And the stronger the dollar gets, the weaker the emerging market currencies go. And they have about $7 trillion in debt, and a lot of that debt is dollar-based. So the higher the dollar, the more they have to pay back. So whether it's Indonesia, whether it's Brazil, whether it's Argentina, I mean, you name the place, Turkey, the Turkish lira now is at an all-time low against the dollar. And they have to raise interest rates because they're having severe problems with capital outflows. So they got to try to keep the money into the country. I mean, you have interest rates now in Argentina at 40%. And you're seeing over there in Indonesia, the central bank just raised interest rates for the second time in a fortnight, and they just keep pushing the benchmarks up higher and higher. So that's going to slow down the economies because the cost of borrowing money is going to be too high. And going back to January when there was the meeting over there in Davos, and we had our Treasury Secretary Mnuchin say that they were in favor of a weak dollar, and I believed it. And for a while the dollar was weak. But now the game's changing, and it's not because the U.S. economy is so strong, it's because the other countries, the currencies and the countries are in deep trouble. So the stronger the dollar gets, the more problems on emerging markets.
Is that going to hurt the U.S. in the long run if people can't return their U.S. dollar debts?
Oh, sure. It's going to hurt the banksters, and it's going to hurt mostly, though, the nations that borrowed the money. They'll get hurt the most. So that's where the problem is going to be. And there was great growth expectations for the emerging markets. But, you're seeing, for example, the Organization of Economic Cooperation and Development, has just put out a cautious warning on future growth. They expect growth, but they're saying it, and they made it very clear. And I'll give you the quote. They said that the global economy is still strengthening, and they said, but risks are looming, and growth is increasingly reliant on support from governments. So what does support from governments mean? Cheap money. And you can't give cheap money if your currency is declining. So we got some real problems here. And not only in emerging markets, like what's going on in Italy. You know, look what they've done. By the way, we are forecasting, Jim, and this is the first show I've said it on because we just came up with this. We're forecasting this is the beginning of the end of the euro and the eurozone. And it's not only Italy, it's Germans, the AfD party, Alternative for Deutschland, it's the Freedom Party in Austria. You already see what's going on in Spain. They're having a recall vote coming up. So it's one problem after another. Since the EU has been established, the citizens have paid the price for it. The banksters and the richest got richer. So we're going to see with what's going on in Italy with the five-star movement and Lega, the League. We see a coalition there that is strongly going to be involved in pushing their way out of the euro. And when Italy leaves, the euro collapses.
Are stock markets around the world controlled and manipulated?
Of course. You know, again, I just read you the quote from the OECD. They're manipulated by the governments. You know, when I went to college, they didn't teach anything about negative or zero interest rates or negative bond yields or quantitative easing. You know, those words didn't exist. Too big to fail? Who made that one up? So no, the whole thing is a Ponzi scheme created by the governments. And again, you know, I just read you the quote from the OECD that growth is, quote, increasingly reliant on support from governments. So they just came out with that report. So yeah, it's being manipulated.
Are trade wars likely to take place, or are we in the middle of one already?
I wouldn't call it a trade war. I'd call it a trade readjustment. I mean, if you're doing business with China and your merchandise trade deficit is $375 billion like the United States, who wants to do business on those terms? Who would, in anybody's business, who would buy and go in debt much deeper than what you're doing with with the person that you're trading with? So this is going to be a readjustment, and the Chinese are smart. They're not going to fight a war over this. They'd lose too much money. And the same thing with NAFTA. You know, the United States, before it went into NAFTA, we had a trade surplus with Mexico, and now we have a $71 billion trade deficit. So it's going to be a readjustment. I don't think it's going to be a trade war at this time.
Canada supplies 70% of the U.S. aluminum, but it now has been slapped with a tariff as well. Are you saying Canada's been taking advantage of the U.S. because they have a trade surplus when it comes to services with Canada?
Well, but when you add the trades with the trade merchandise and services, you know, it's a different deal. And again, the United States has not benefited from these deals. The only people that have benefited are the multinationals. They sold out the countries. For example, you have all the high tech. I mean, you know, you go back to 2000. That's not ancient history. You know, everything we saw coming out of China was shirts, shoes, dishes, you know, lower end consumer products. And what the corporations did is they went over there, they gave them all their technology so they could make more advanced products, and they took the technology. And now, you know, one of our top trends for 2018 was what do we call it? Follow the Yellow Silk Road. And that's what's going on. It's the new Silk Road, and China's in charge. So going back to it, it's it's a two-sided game, and the United States has been losing in it. They gave away their technology, and Europeans as well. So it's a readjustment. We don't see it again as a trade war at this point.
Are some currencies in trouble?
Well, yeah, as I was mentioning, you're looking at the Turkish lira has hit an all-time low. You're looking, at one after another. Just in a month, in 3 months, the Turkish lira fell 23% against the dollar. You had the Indonesian rupiah, which had lost 4.6% against the dollar this year. And it's one currency after another that just keeps going down. The Argentinian peso lost over 18% in the first 9 trading days of May. And that's why they have interest rates now at 40% in trying to stop that fall. The Brazilian real is down by more than 11% in 2 months. And again, the dollar is getting stronger, not because it's doing so great in the United States. It's because the other currencies are having such problems.
The oil market's becoming more volatile. What do you see ahead for crude?
It depends really on the Middle East and wars with heating up. A report just came out today from Haaretz, the Israeli newspaper, showing that back in 2011, Israeli Prime Minister Netanyahu wanted to launch war against Iran. And the military industrial complex over there talked him out of it. And now that war talk is heating up, particularly with Trump pulling out of the Iran nuclear deal, and Israel saying they will not tolerate having Iran have permanent bases in Syria. You're seeing from the Saudis, that anti-Iranian Saudi conflict has been going on for quite a long time, escalating. So we believe that the Middle East is going to ultimately determine the price of oil. But right now we see the $70, $80 range for Brent crude as where it's going to stay. And already this year, for example, with the rise in oil prices and gas prices consequently at $3 a barrel in the United States on average, according to the Lundberg survey, you're looking at some $28 billion being sapped out of the retail market that would have gone into restaurants and other purchases that's going into gasoline. So when we talk about where's the market going and what does it look like, it's also the Saudis need oil at almost $90 a barrel for their economy to break even, and the Crown Prince said he wanted it between $80 and $100 a barrel. So, and if it goes up too high, we believe that there's going to be some real pressure. And by the way, there's rumors coming out that when the Crown Prince, of course, everybody who follows the news remembers when he was in the States, they had him here on a 3-week public relations tour, meeting with everyone from Oprah to Trump, and the big shots at Silicon Valley. And then in the end of April, there were reports coming out that there was trouble around the Saudi palace. They were saying, it was a toy drone, and they were shooting at it. And now they're claiming that no one has seen the Crown Prince since that time. And they don't know if there was an assassination or assassination attempt. But, we don't know, and we're not conspiracy theorists. I mean, for all we know, he may be in his $500 million chateau in France, and he went there on his $500 million yacht. It's taking off for the summer, so we don't know. But what we're saying is he's not been seen.
Gerald, last time we had high gasoline prices, a recession followed. Gasoline prices are hitting record highs. Oil is nowhere near a record. What does that all mean for the economy?
Well, gasoline prices are hitting new highs, not record ones. But
in Vancouver they have.
They can't take it. The tax breaks, for example, that Trump pushed through, according to the Tax Policy Center, 82% of the tax benefits went to the 1%. The average American family got the grand total of $930. Half of that's already been eaten up with higher gasoline prices. So yes, if gasoline prices spike, we believe that'll bring down the global economy, and recessions will follow.
Is migration into Europe having an effect on their markets and economies?
Well, not so much. And again, that's one of the things that nobody talks about, migration and refugee problems. How did these happen? I mean, nobody talks about the murderous wars launched by the Nobel Piece of Crap Prize winner, the arrogant Obama. Gaddafi has to go, I says. I don't like what that guy's doing to his peoples. As he jumps on his jet and goes down and takes a vacation to Brazil with his mother-in-law's wife and his kids after he launches the war against Libya. When Gaddafi was in there, we wrote about it in detail in our Trends Journal, how he warned that when you overthrow me, you're going to have a refugee and migrant crisis that you won't be able to handle. People weren't leaving. Migrants weren't coming out of Africa and refugees and going out from Tripoli into Europe. He had stopped that. He made a deal with Berlusconi from Italy and others. And also, the wonderful wars, that Nobel Piece of Crap Prize winner Obama with that Afghan troop surge. And folks, we're going back in there to Iraq because we don't like what's going on over there, and we're going to stop it from happening. Those Yazidis, I tell you. Yeah, we got to stop that massacre. So what they've done, and Assad has to go. I don't like that guy. Yep. And what did they do? They destroyed one nation after another. And no one talks about it. Where are the refugees coming from? Out of Afghanistan. Out of Iraq. Out of Syria. Because the murderers, the Obamas, the Bushes, the Clintons, and now the Trump are destroying these countries, and that's why you have a migrant and refugee crisis, and no one in the prostitute media wants to talk about the cause and effect.
Are interest rates heading higher around the world?
They're heading higher around the world, as I mentioned, particularly in emerging markets. But look what's going on now over there in Europe with the troubles with Italy and the inability to form a government and the fears that as the third largest economy in the Eurozone, being if it goes into trouble, how are they going to raise interest rates in the EU? They won't be able to. And if the United States raises interest rates too high and the euro goes lower, that's going to cause some real problems over there as well. So the United States is in a trap. And if the United States raises interest rates too high, the dollar gets too strong. I mentioned what's going on with the emerging markets. Their currencies get a lot weaker. And they have to raise interest rates a lot higher. So basically, Jim, the Ponzi scheme, and there's always new ones, but this old Ponzi scheme is getting ready to die of old age. And they'll have to come up with a new one to save the game. And they will, because they're the banksters.
We'll have more with Gerald Celente next on This Week in Money.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Gerald Celente. Gerald, are higher interest rates needed to propel gold out of its current trading range?
Well, if higher rates go up higher, gold goes lower, because the stronger the dollar goes, the lower gold goes, because there's an opportunity cost in holding gold. And if the dollar gets stronger and bond yields go up, people go into safer investment opportunities. So higher rates are an antithesis to gold. If rates go lower and money becomes cheaper, gold becomes more valuable. So we see it as the opposite way around. What we're saying now is gold's maximum downside risk is about $1,200, about $100 lower than where it is now. And we're looking at a very strong upside potential, but I've been saying this now on your show probably now for the last almost 5 years. Gold has to break over $1,475 an ounce, or $50 an ounce, before it explodes. But before it gets there, it has to break over the 1385 mark. So that's what we're looking at right now. So the downside risk is very low, but with global tensions, socioeconomic and geopolitical increasing, we still believe that gold is the best safe haven commodity.
Is North Korea still a threat to the world?
Never was. It's more hype than reality. This country has a GDP smaller, about half the size of West Virginia, a population the size of Texas. They export a couple of $1 billion a year at good times. No, it's more the military-industrial complex, making you fear an enemy. And what are they going to do? If they got a couple of weapons, they got a weapon that can hit California. What does the United States have, 2,000? You know, it's like saying you have a gun and there's a police force out there or an army out there at your house, and you have a gun and you're inside. Who's going to win? So no, it's just nothing more about building the military-industrial complex. We never saw it a threat to the world, because if they did anything, they'd be wiped off the map. And if the United States did anything to North Korea, kiss South Korea goodbye. You know, what do you got? Seoul, South Korea is 35 miles from the DMZ zone, you know, with about 26 million people in the Seoul metropolitan area. If they attack North Korea, say goodbye to Seoul, say goodbye to Japan. So no, we believe that the greatest threat in the world is the United States, Israel, and Saudi Arabia planning more attacks and more geopolitical and sanction pressures against Iran.
Is Iran likely to make a deal with President Trump?
Doubtfully. You know, why should they? And they won't. They held up their end of the bargain according to the International Atomic Energy Agency, so there's no reason they will.
Has the Democrat Party moved far left and is self-destructing?
Democratic Party's far right. They're warmongers and corporate beneficiaries, as is the Republican Party. There's very, very little difference between the two of them. Have you heard any when Trump sent missiles going into Syria based on a phony lie, another one of that guy? I forgot that began it. That guy Skirple and his daughter. And they were poisoned by the Russians with the most deadly poison ever invented in the world. History 1 and History 2 of the world, Part 1 and Part 2. Oh, they're both alive now. Oh, yeah. And there was never any proof. Yeah, but that's all right. We can make up any story we want. Like they made up the other one a couple of days ago about the Russians killing that journalist in Ukraine. And then he shows up the next day. So no, it's just more propaganda. And that's all we're going to keep saying and hearing. And so we don't see much coming out of it other than more destruction.
Are NAFTA negotiators from Canada and Mexico strong enough to stand up to the Trump administration?
No, they're not. The United States is in the driver's seat. And again, going just to finish up though on the Democratic Party moving to the left, you know, you don't hear any outrage. You heard nothing about that. You didn't hear any outrage about the United States from the Democratic Party putting its embassy in Israel against international law. You don't hear the Democratic Party condemning Israel for stealing more land under the name of settlements. You don't hear the Democratic Party condemning Saudi Arabia for destroying Yemen. Obama sold them all the weapons they needed to do it, and Trump is too. There's no left in America. It's left out. They're both murderers and thieves, Bloods and the Crips. Just different names, same game. And going back to NAFTA and trade negotiators from Canada and Mexico, no, the United States is in the driver's seat. We're buying from them, and we're not selling that much to them. So we think there's going to be negotiations.
We're hearing President Trump is likely to make wide-ranging changes to Dodd-Frank. What are you hearing?
No, it's already done and keeps on going. And Dodd-Frank wasn't much at all anyway. The big one was Glass-Steagall, and that's long dead. Again, talk about that Democratic left, yeah? Brought to you by Bill Clinton. Hey, you like that Yugoslav war? No, I'll tell you what. How about who's bombing Iraq every 3 days? Hey, all you liberals out in the left, you like them GMOs? Yeah, Clinton brought you those. And also Clinton got rid of the Glass-Steagall Act that allowed the banksters to become the big criminal operations that they are. Now, Dodd-Frank was nothing other than a little cover-up of, not much of anything.
Does the mainstream media still deserve the moniker fake news?
Well, to some extent it does when it promotes wars based on lies, like the toilet paper of record, the New York Times, how they promoted those uranium tubes and that yellow cake that Iraq is getting in through Saddam Hussein. And yeah, remember that one, that lie? No, that's mostly not fake news. It's dumbed down news. Hey, did you hear about Roseanne? Well, go to CNN. You can read about anything you want about her. Hey, what's Stormy Daniels doing this week? Wonder where she's dancing. Hey, did you hear about that guy Cohen? The Russians are coming. The Russians are coming. What fake news? It's garbage news. It's crap news.
Well, I've made a point of turning off the TV news when they lead with a dog story. Every newscast is full of dogs and kittens and rescued bears.
Yep, and that's moron news. They're prostitutes. They get paid to put out by their corporate Johns and their Washington whoremasters. They're not journalists. Again, they're prostitutes.
Is the automobile market in trouble?
It's going to be, particularly in the United States, if gas prices go up, because they've stopped. Most of the automobiles they're selling are SUVs and small trucks. And as the price of oil goes up, people aren't going to be able to afford it. But right now, they'll still be able to make it. And, you have all these other people with all these deals to buy these subprime auto loans. So we don't think they're in serious trouble right now, but definitely it's not as good as it used to be. And again, the pickup trucks and large SUV, gas guzzles more gas, and that's what the people want. And I think, you have, in America, people over 20 years old and 20 years and older, 70% are either overweight or obese. So I guess that's why you need those bigger vehicles.
Are automakers morphing into technology companies?
We don't see, we did, one of our top trends was driverless cars. How about driverless Cliff? We don't see this happening. Now, how many cars did Fiat just recall last week? How many Fiat, one after another? Name the company, name the recalls. BMW a week or two before. Millions and millions of automobiles being recalled every year. I think it's up to 53 million in the United States in just the last few years. And they're going to have driverless cars? We don't see it happening. So we think that they're caught into the geek world fantasy. And again, we don't give financial advice, but this is not an opportunity that we see growing.
Pickup trucks and large SUVs use more gas but are safer for the passengers inside of them. So you have a choice: fuel efficient small cars or big truck. Do you drive a bigger vehicle or a more fuel efficient one?
I drive a 1994 Audi Cabriolet convertible. Yeah, I don't, I've had sports cars mostly. This is the biggest car I've had probably in my adult life. I don't drive around that much, and I hate all that new technology.
Yeah, well, both of my cars are old, 2002 and 1984, an 84 Porsche.
Well, you got me beat. You got a better one.
Are self-driving cars potentially dangerous, and should they be kept off public roads?
Yeah, we don't think they're going to happen. We think it's a whole fraud. There's going to be driverless routes for buses and trucks and things going from destination A to B. But even at that, you're going to have drivers in them. So, on enclosed routes like in airports, for example, you'll see that kind of thing. But we don't see it happening, not in the next 20 or 30 years, as they're predicting much sooner than that. We don't see it happening.
What's the latest on bricks and mortar retail?
Well, again, Sears is just about going out of business now, and they all became too much of the same. We had forecast the pall on the mall, back many years ago. I even spoke to that trade association, the International Shopping Center Council, whatever it's called, and we warned them about that. All the malls became the same. You went to one, you went to the mall. Same stores, same stuff, same look, same nothing. To nowhere seen. So now we're seeing a revival of brick and mortar on the smaller local level in the organic growth cities, like Vancouver, for example, where you are. You have a lot of small retail stores and fashionable retail stores. So things that are unique, and people still like the experience of going into a nice environment. And again, that's the other thing that killed brick and mortar. Isn't that wonderful, going into a warehouse to go shopping? Oh, what fun it is to go into a place that looks like a large self-storage unit. So they've taken the glamour and joy out of shopping, and by going cheap and crummy. So the ones that have style and grace, we believe, will still attract a nice crowd.
Gerald, are cryptocurrencies getting new traction in the marketplace?
Not yet, and they're up against too much pressure. We don't see them going away, however. We were more bullish on them, of course, before the governments came down and started all these regulations. And that's what's really holding them back. But then again, on the other hand, when you see the majors getting into them, whether it's Goldman Sachs or different exchanges, there's a future to them. So we believe their future is going to continue to grow, particularly as more of the world goes cashless. And also as there's more problems with fiat currencies. For example, what I was mentioning to you about what's going on in Argentina or Venezuela. I mean, you name the countries that I just went through. The Turkish lira losing, it's so much of its value. So the average person saying, why do I want to lose my money? Let me buy cryptocurrency. And that's a safer bet if they can't afford gold. So we see more of that happening. So we see the future of cryptocurrencies not going away, but they've definitely softened since more government regulations have clamped down on them.
Could plastic be replaced with something more environmentally friendly?
I mean, remember that old movie, The Graduate? Dustin Hoffman. Plastics, it's the future. That was at the 60s, right? So, I mean, we're only talking, let's say, go back to the 40s when it first really started to happen. Well, it's not ancient history. We did well without it before. We could do without it now. Of course, there could be other substitutes, and many of them also coming with hemp, which is becoming now, of course, after the morons, the jerks, the stupid freaks called politicians banned it from being grown. It was being used for a lot of things that did replace plastic. So now that the idiots are letting it happen, particularly in Canada with marijuana as well, and the only reason they're doing it is to gain tax revenues. I mean, can you imagine this? This stuff has been around since the beginning of time, and you got a couple of jerks called politicians. And look up the definition of a politician. Someone that's manipulative and devious to gain advancement with an organization, banning this stuff. I mean, who the hell are these people to tell us what to do? But anyway, now you're seeing a relaxation of it. So kind of more natural products, there's definitely replacements for it. And hemp being one of them.
Is the quest for clean tap water getting tougher and tougher?
As the populations grow bigger and bigger, yes it is. Look at the numbers. You go back again to the beginning of the 1900s. There are, 1.5 billion people on the planet? A little more than 100 years later, what do we add? 6 billion? So, and then with the weather changes going on, drought conditions increasing in different parts of the world, it's going to be very difficult.
What market sectors are you bullish on?
We're bullish again on, we're still bullish on organic city growth, and those are cities that are being reclaimed because the major cities are being too expensive. We're very positive again on the whole cannabis industry and medical marijuana. We're bullish on gold in the long term, and still believe it's the ultimate safe haven, and very bullish on all the natural healing organic product sectors. They're just going to continue to grow.
What's your latest globalnomic view?
The globalnomic view is the big one we're looking at now. The two of them are Iran, and again, if there's a blow up in the Middle East, making a globalnomic, oil prices skyrocket, markets crash. End of story. And also on the globalnomic front is what's going on in Italy. This is a big one, and many of the analysts are saying that it doesn't mean that much. Italy's not going to exit the euro. Don't bet on it. With Lega, they got 17% of the vote in the election in March. Cinque Stelle, the five-star movement, got 32%, and they're both quite anti-Eurozone and European Union. And now with all the turmoil going on, Lega, which is more anti-European than the five-star movement, has now gained about 25% in the polls. So if they kill the euro, this will be a crash like we've never seen in our lifetimes. It'll be worse than the panic of 2008, and it will be at the level of the 1929 crash and worse, because there has never been an economic recovery. All it has been is cheap money going into the multinational corporations. You look at the numbers, merger and acquisition activity, and stock buybacks. End of story. So there wasn't a strong foundation for growth. So if there's crises with Iran or Italy, kiss the markets goodbye.
What's new with Occupy Peace?
Well, we're going to be pushing forward very shortly with a stronger movement, trying to gain more traction. The website now is occupypeace.com, and again, the choice is the people's. Either we go to war or have peace. And for example, when you look at China and their advancement all over the world, buying up the world, I don't have to tell you much about that over there in Vancouver, the business of China is business. The business of America is war. And what the Americans don't understand is that by feeding the military-industrial complex, they're starving themselves economically, spiritually, and morally. You take a ride in New York on the subway, it's a night in Calcutta. The roads everywhere around here are all ripped up and potholes everywhere. And I just saw in Pakistan, the Chinese just helped them build a beautiful new rail system. They have a rail system in Pakistan that far outstrips anything in the United States. So do you want to occupy peace, or do you want to keep occupying stupidity? The choice is yours.
Gerald, how can people find out more about the Trends Journal?
Very simply, go to trendsjournal.com, trendsjournal.com, or trendsresearch.com. It's the only magazine where you'll read history before it happens. We've gone from a quarterly to a monthly Trends in the News broadcast each Monday through Thursday, and trend alerts each weekday and more as they're needed. Trendsresearch.com. History before it happens.
Gerald, thank you so much for being on This Week in Money.
And thank you, Jim.
My guest has been Gerald Celente, publisher of the Trends Journal, available online at trendsjournal.com. He was speaking to us from historic Kingston, New York. Coming up, Danielle Park, next on This Week in Money.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking to Danielle Park, editor of the popular blog Juggling Dynamite and president of Venable Park Investment Council Incorporated. Welcome back to the show, Danielle.
Thank you, Jim.
Danielle, it looks like Donald Trump has decided that a worldwide trade war is just the way to go for the U.S., slapping tariffs on aluminum and steel, not just on what comes in from China, but on Europe and on Canada and Mexico. What's the fallout going to be when we have such a big trade war? The U.S. gets most of its aluminum from Canada and a large portion of its steel.
Yeah, I think, the thing is that Canada is actually the largest U.S. export market for the United States. So right now, when, they say they're targeting trade imbalances, they're actually selling more to us than we're selling to them at the moment. They sell as much to us as China, Japan, and the UK combined, in terms of their export market to those countries versus us. So I don't think that we're the primary target of this, but there's no question that the rhetoric will, concern or contract the global economy that's already relatively weak, right? Already we've seen a downturn in global growth rates. And so this, what they call protectionist rhetoric, really just, puts in more obstacles, so to speak, for trade, and also higher prices, so inflationary in some aspects. So when you're looking at a household sector, for example, in Canada that is already at its record indebtedness, higher oil prices. We saw a major jump in the price of oil. We've seen higher interest rates, and now also, higher consumer goods potentially, if these tariffs filter through from wholesale to retail prices. So I think all these things just really pile on to a cash-strapped consumer, and that's not likely to be helpful for consumption, and consumption being the primary driver of the Canadian economy. So, the fundamental problem, Jim, as we've discussed before, is that we've had now this longest expansion, second to longest in human history. It's been a decade since nearly a decade since we came out of the last recession, and 9 years since we went in. And during that extremely long expansion period, what people ought to have done was pay down their debt, build up their savings. Businesses should have got lean and mean, built up their cash, got really efficient, so that when you got to the slowdown part of the cycle, everyone would be able to sort of jump that gap without a great deal of carnage. Unfortunately, we've got the exact opposite condition, right? So you've got a whole country, business, whether it's business or government or household, that have doubled their debt load in the past 9 years. And so have very little liquid savings, have a lot higher household expenses and carrying costs for all the consumer debt products, cars, everything they've taken on. So these trade wars or conflicts, these global standoffs, these are all indicative of shrinking cash flow globally, where people have been, and that's not a new trend, right? That's been going on for many years. And so you're getting increasing strife, which basically propels these populist leaders who make these stances, which are not really in, the economic interests of the collective, but basically trying to take back power for the individual countries or individual sectors of the country. So, for example, in the U.S., it's Mr. Trump representing as he says, he's representing the working class who have been pummeled in the past 20 and 30 years with all the globalization and, rising debt and all the things that have worked against them, stagnant wages. So he's saying these populist things while at the same time he's really serving, trying to serve corporate interests, which basically control the lobby in most countries in the world, but also throwing these tidbits coming into the next election. So what a complex mess. Always kind of the case, but this time particularly accentuated by the fact that we haven't made any economic progress in terms of, it's all looked showy perhaps in terms of progress, but if you look at the net benefit, the net equity that has accrued to people in the past few years of the expansion, it's been counterproductive. So it's really worked to emaciate us rather than strengthen us for this downturn. And therein lies the problem. And it's not just Canada, of course. It's what's happened in all the emerging and developing economies in the world. They were encouraged by a weak U.S. dollar, for example, heading into 2011. Out of the last crisis, the U.S. dollar double bottomed. In 2008, it bottomed, and then again in 2011. And that encouraged the world to really go on a spending spree in U.S. dollars. Rates were really low. The currency was weak. So foreign buyers were able to borrow a whole bunch of U.S. funds and pay less rates than they would have at home. And that enabled them to take on even more debt. So long as the greenback was weak, that was a decently, cheaper way to access funds, and they sort of took on a lot of debt to fuel growth. But then as soon as the U.S. dollar began to rebound in 2011, it's had the opposite effect, right? It's made everything more expensive. It's made it harder for them to service this U.S. debt. It has put the world into a cash crunch. And it has, as I said, the growth, the spending has been contracting as the cash flow has receded. So this is all sort of a long time building, and this coming up to the midterm election in the U.S., making them, make these, taking these positions, anti-trade, so to speak, positions, are just a sort of a symptom of that receding liquidity and cash flow and ability to spend that's already been dominant for many years.
We'll have more with Danielle Park next on This Week in Money.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the Pink, symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange, symbol PBX. For more information, please visit us at powerbandsolutions.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Danielle Park. Danielle, is it a good deal for Canada to take over the Kinder Morgan pipeline from Edmonton to Vancouver?
Well, when I talk about this, Jim, I get people very upset, and I get a lot of people writing and telling me that they strongly disagree and all that. But the fact of the matter remains that antiquated fossil fuels are the past, and the future is going to be about more and more about renewable energies. And, I think throwing more money after economically unfeasible projects, whether it's a private corporation that's been doing it, or the government that's going to take it over and pledge us taxpayers to do it. In the longer run, it makes no sense. It's bad investment. In the shorter run, it makes it look like we're doing something to create jobs, and it makes people feel like, the government's doing something. But ultimately, if it's the wrong something, if it's wasted money, currently the fossil fuel industry gets about 38 times more subsidies than renewable energies, and yet fossil fuel demand is weakening in the world. And we're getting this resurgence in these other types of energy sources, efficiency, electric engines on all sorts of vehicles. So that's the future. And it's not a quick fix. It's not an overnight thing. So people think, oh, well, that'll never happen. But it is happening. It's already happening, right? So I get it that there's a financial crunch because, again, why? Because we didn't plan properly. We should have been thinking about the renewable energy future over a decade and more ago. We should have been doing more investment in the different types of infrastructure so that we could be more efficient, so that we could produce this stuff domestically, not just doubling down on the oil patch, which is what we did. And so we've thrown a lot of good money after bad, so to speak. And the only reason that these projects were feasible, so to speak, economically in the past is when you didn't look at them on a full cost accounting basis, which was the fact, for example, that the tailing ponds are being left by the corporations that made the mess in the oil sands and are not being cleaned up, Jim. So who's that going to fall to? That's going to ultimately fall to governments to clean up after companies have extracted the profits, which it should be that you claw back the profits and make them clean up the mess, which is a byproduct of that process that they were doing. But because that hasn't happened yet, they've said, well, these projects are so much more feasible, or they'll say, oil is so much cheaper, for example. But only if you don't count all the other costs that we're all left carrying, whether it's air quality, whether it's water pollution, whether it's the cleanup afterwards, whether, including the incredible subsidies that we're spending, the taxpayer dollars, not just to bail out projects that shouldn't be bailed out, like the Kinder Morgan pipeline, but also just to sustain this industry, which has extracted these enormous profits. So it's really quite crazy when you think about it. People that argue for the oil patch or argue for the pipeline or argue for the energy, the fossil fuel sector, typically are, tend to be more conservative in their views. They supposedly like free capitalism, free markets, but this is the most non-free market that exists in the world. This has been the benefactor of enormous government largesse for many, many, many decades. And so we really have to come to that realization that that was the past, and the future is going to entail new innovation and new products, new service types. And I noticed that the city of Edmonton, to its credit, just endorsed a plan to buy 100% renewable energy for all the city operations, and this is to try and help it hit its, reduced emissions target. So, but at the same time, it'll make for, again, on a full cost accounting basis, if you're not creating all the environmental carnage and waste and pollution, you're going to have a more efficient energy source as you develop it. So whether that, there's many different kinds you can look to, whether it's capturing geothermal, whether it's, wind, whether it's solar, whether it's algae, all these things that we can use. It's not one solution, it's many. So anyway, that I would say that they're making the wrong decision. And as a taxpayer in this country, I wish we could get more traction in the right direction instead of wasting more money on add, debt, and stir an unsustainable business model.
Well, here in BC, we have some of the greatest tides in the world, and because of Vancouver Island, the tides are different as you go along the coast, yet we have only one place that is using tidal energy, and it's a fishing resort. They have a barge there that could supply power to 5,000 homes, completely renewable, sustainable, non-polluting, doesn't hurt the local wildlife, and yet other countries are using tidal power using technology that was developed here in BC. It's called Blue Energy. Also, I just saw two articles. You can run a car on compressed air. A French scientist has developed a way to use compressed air to run a conventional piston engine, and British scientists use compressed air to run a turbine that generates electricity for your car. Both very efficient, and again, what's the pollution? Air.
Jim, there's so many sources and ways to reduce and not need as much energy. There's so many ideas that are there that can be developed. Let's not forget that when Henry Ford first conceived of his automobile in America, he actually envisioned it as an electric car. An electric vehicle was the first idea. And in fact, he went to Thomas Edison at that point because Ford was working in Edison's plant in Detroit, and he sort of pitched him his idea, and Edison actually became like a mentor to Henry Ford when he was very early on in his idea. So the idea always was originally about electrification, but it's just that over time, at the birth of the extraction industry in the United States coincided with this technology, and they just really got down this other path. So, all that said, it's only been, 100 and some years and millions of years of history on the planet. So people tend to be very short-sighted and insist that what's been is inevitably, what will be. And that's just never been the case. So I think that we're making leaps and bounds of progress here. Did you notice poor Elon Musk, who's been through a really rough time and everybody loves to hate him, and he's had all sorts of production problems, but Consumer Reports gave a favorable review this week after they'd corrected some of the early problems they were having with the new lower cost sedan that he's bringing out. They ranked the car very highly. So and then all the other car companies in the world are now rolling out their electric vehicles at an incredibly fast pace. And I say thanks to Musk for leadership, because they wouldn't have done it if they hadn't been embarrassed to get started. But now they're starting to see the light. That, plus don't forget the emissions scandal. I just got a class action lawsuit notice in the mail about our Mercedes BlueTech truck, which we bought 10 years ago. Again, bought it specifically because it was the cleanest SUV supposedly available on the road at that time, and we intended to drive it for a very long time. But all that was also cheating software that was put in. So I think, as repulsive as this episode is of Fraudgate in the diesel manufacturers, on the upside, we are bringing this, again, talk about the layering of these things all coming to a head at one time. Now that the Teslas of the world have inspired or embarrassed, and now that they've embarrassed themselves with the Dieselgate scandal, the major car manufacturers are all sort of trying to do the big bath and come out with mea culpa and restart and say, okay, fine, we'll go electric, because then we can't be lying about the emissions, because there won't be any emissions. So I noticed, however, that Mr. Trump this week has threatened to put a ban or put a tariff on European cars coming in. And I was just thinking to myself, that will probably be a boost for Tesla, because being an American-made vehicle and being a luxury car maker who is in head-to-head competition, so to speak, in that category with the German automakers, that would actually inadvertently probably help Tesla, even though I don't think that that's why Mr. Trump's doing it.
We'll have more with Danielle Park next on This Week in Money.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the US. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the US and GET in Canada. Find out more at glancepay.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Danielle Park, editor of the popular blog Juggling Dynamite. Danielle, the Bank of Canada says it has to hike rates at least one more time this year because it wants to meet its inflation targets. But has the Bank of Canada not noticed how much Canadians are paying for gasoline? Especially take a look at Vancouver, where it's at sometimes $1.62 a liter. Now, if that's not inflation, what is? Of course, officially the government doesn't count housing or fuel in its inflation figures. Is it time that they started?
Well, I don't think they're going to start, but the fact of the matter is that they have been promising to hike. They promised a whole bunch of rate hikes coming into 2018. They went once in January, and they've blinked the last three meetings. Now all eyes are on the end of July in the hopes that they'll squeak out one more 0.25 hike before, the economy slows so measurably further that they're not able to justify anything. I think this is classic late cycle stuff, right? There's, you're at super lows in the unemployment rate. That's classic late cycle. In America and Canada, you've got highest employment we've had of this cycle. And so there is not a lot of slack left, so to speak. And at this point, we're already seeing a spike in things like loan defaults because, as we've said, interest rates, just the minimal tightening that took place over the last 2 years has already been significant because it's a function of not just the rate, but the quantity of debt and the relative change in rates. And so because people, as I say, came into this downturn with this huge debt burden, the hikes to date have already been biting. And on top of that, as you say, the spike in oil prices, which I don't think is sustainable, but in the short run, it's certainly taking a bite out of these cash flows that people are finding in scarce supply. So all those things together, typically a spike in rates and a spike in oil prices has been the final straw in cyclical downturn to ignite a cyclical downturn or recession over the past many decades. And I think that this is just a recession waiting to happen for all the reasons I've already articulated, because it's, first of all, a natural recurring part of every economic cycle, but secondly, because this one's been, stalled and extended for so long on add, bet, and stir. And now we've got this intensification of rates and energy prices and feasibly higher consumer prices, as we said earlier, because of these tariffs that are coming in. So at some point, there's just not enough cash flow to go around, full stop. And you will see that show up in slower consumer spending, which we are already getting. And, I think the Bank of Canada, as I say, likes to talk strong but carries this diminished stick this cycle. Most cycles, let's not forget, they come into the downturn with policy rates above 5%. So they have, many percent of room to cut. Unfortunately, this time they're coming in at, 1.25. They've barely raised rates off the Great Recession lows of 2008-9. So they really haven't got much to work with here. And I think that's just going to make the coming downturn that much longer lasting than it otherwise would have been. But on the other hand, it's going to force some actual reform and change in habits, which I think is desperately needed. So I see it as it's going to be a painful episode. It's probably going to be a longer downturn than people are used to from the last few. But I think that ultimately that's what's needed as a catharsis to really clean out the system, get a bunch of the bad debt written off, because frankly much of it can't be repaid. There's just, too much has been advanced. And hopefully again to get some consolidation in the financial sector, which has become grotesquely oversized. It's really a monster of our own making through the deregulation process, the cross-selling, the merging of sales and advising, all these things that have really happened just since 1980, have really brought us to the point we are today. And it's run its course. So on the downside, that's going to be a painful give back period. But on the upside, we really can't continue like this anyway. And there's much to be improved and much advantage to be had from a big shake-up event that will, reboot the economy, reboot infrastructure spending, as I say, and get us off this obsession with giving, consumers debt to buy non-productive goods. That chapter's over. We really did our worst on that, and now we need to think of ways to increase efficiency, to make it so that consumers can have a better standard of living while spending less, and to think of smart ways that will really improve quality of life, not just have the appearance of prosperity.
Ross K. from The Wealthy Homeowner says right now more than 1.1 million Canadians could not get the same value for their house as what they paid for it. Now, is that an important figure, or is that just something in theory, and could it cause a recession in Canada?
No, I don't think it's that per se that would cause a recession, but there's no question that when you, for example, we've touched on this before, I know in my residential area, I'm about an hour north of Toronto, it has really participated in all the mania of the, quote, GTA, the Greater Toronto Area. We saw incredible price gains in this area, like everywhere around the vicinity of Toronto, as far and farther north, frankly, than even where I live. So, for someone that's been living in the same house for 20 years, they don't have any debt. The price maybe went up a great deal and it's been falling now for the last couple of years, but that's all sort of on paper, and you go, oh well, it's my house and I didn't sell it, but I didn't have to go buy another house. So at the end of the day, those people are kind of impervious to these effects. It's the people who, reach to buy too much house with lots of debt that, part of their plan is going to be challenged when that debt comes up for renewal, which more than half of the mortgages in Canada are coming up for renewal in the next 12 months, as an example. So, the rate hike can impact that. It also affects people trying to get into the market. But as I say, lower prices are their friend if they can be patient. If they're not, if they can let this process play out, they'll get a more effectively priced or a more affordable home at the end of it, which is positive. We need that. We need to get the young people back, being able to afford a roof over their house without, and being able to eat, if you know what I mean. So, yes, I think that's a stat that reflects the fact that we've been through this manic period in Canadian home prices. But it's not that so much that causes the recession. It's the debt, as I've said. It's the inability to keep expanding consumption when you're tapped out, and then you get the give-back period.
Danielle, plastic pollution in our oceans, overwhelming giant islands of the stuff. The city of Vancouver says it wants to ban plastic straws. Should any bans on plastic extend from that? And I have to say UBC has a program where if it's not biodegradable, you cannot sell it on campus.
Which is what we need to have, right? We really do. I was thinking about the good old days, Jim, when we were kids, and how it was that we survived without plastic for every single thing. And if you think about it, it's simple things, like we used bars of soap, right? Think about that. We used bars of soap so we didn't need to have containers of liquid everything sitting all over our counters and our bathrooms and, everywhere that people wash their hands. So there's just one small way. Another way was people, made more of their own products at home. They didn't go out and buy everything in these single-use containers. So also we had people like the milkman come and collect bottles at your house to reuse them, right? You took your egg trays back to your egg person. So we really have gone so far the other way that it's ridiculous. And, the recycling program, as well-intentioned as it has actually been, I think, a negative in this, because out of sight, out of mind, right? People have been sorting, even conscientious people have been sorting their trash and thinking, okay, here's my recycling. Well, that's getting recycled. What's the problem? The fact is most of it is not getting recycled, right? And most of the plastic has been ending up in landfills or our waterways or being put on barges and taken to poor countries where it makes its way back into our water system. So clearly we have to stop this madness. And, the origins of plastic, I put a really cool little clip from National Geographic on the blog this week, just showing the history of plastics. And originally they were plant-based, right? That was the original way formulas were derived from plants. But they determined at some point, many like 30, 40 years ago, that fossil fuels could make a quicker or cheaper product from which to make these resins. The problem, it goes back to what I was saying before. Cheaper in what way? Cheaper when you don't count all the carnage and pollution and, waste of everything that it creates and all the carnage we have to clean up afterwards. So cheaper in only that sense. Cheaper in the sense that the industry was subsidized by taxpayer dollars to make a cheaper product. If you take all that out of the equation and you look at what's really best for the health of our world and our humans, and what is actually intelligent in terms of, you don't want to have all this waste that you have to spend a fortune going around collecting and doing something with. It's much smarter to use biodegradable or reusable packaging. So my point would be that this is the future, because we cannot possibly continue to throw out the stuff at the pace we have. It's just overwhelming our whole system. And so, much smarter, again, to go back to, let's use plant-based plastics that biodegrade, and let's have a connection between the packaging that a producer uses and their responsibility to collect and recycle that packaging. So if you're putting product out in something that actually cannot be recycled and you're not taking responsibility for that process, then you can't use that packaging anymore. And as I say, this whole movement towards health, quote, healthy products, green products, the authenticness of the product has to go beyond the content. It has to include the packaging. So this, when you're reading healthy labeling and it's on plastic containers that can't be recycled, clearly we've got a problem. And so it goes back to what I think regulation, laws about what packaging people are able to use, and putting the responsibility back with the packaging you choose as a product producer is something that you have to, be responsible for how it's reused.
Danielle, before you go, can you please tell us just a little bit about your company, Venable Park Investment Council Incorporated?
Oh, well, Venable Park is a independent, absolute return wealth management company where we look after for individuals, and we are not buy and hold. We're not static allocators. Our function is really to try and avoid negative years, not to track benchmarks up and down, but to help people accumulate life savings and preserve it through all market cycles.
Danielle, thank you so much for being on the show.
Hey, thank you, Jim.
My guest has been Danielle Park, editor of the popular blog Juggling Dynamite and president of Venable Park Investment Council Incorporated. She was speaking to us from the Toronto area. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Gerald Celente, and Danielle Park. And thank you for listening. If you have any questions for the show, you can email us at info@howstreet.com. I'm Jim Goddard. We'll be back next weekend with more This Week in Money. Now stand by for a company showcase update from American Manganese CEO and President Larry Reaugh.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, CEO and President of American Manganese. Welcome back to the show, Larry.
Well, glad to be here, Jim, and we've had an exciting week, so I imagine our shareholders are smiling.
China is opening the world's biggest factory, and you're connected to it somehow. What's the connection?
Well, China's talking about a gigafactory 5 times bigger than the Tesla factory in Reaugh, and that's significant. I mean, wow, that's just one company, and there's all kinds of gigafactories being built around the world. What's that tell you? That tells you that there's a demand for lithium-ion batteries, and specifically in the EV car realm. Bloomberg came out with statistics from another company that there was going to be 121 million EV cars on the road by 2030. That number just keeps going up and up and up. And so it's all good for American Manganese, who's got a recycling process that can handle a lot of these batteries, and I think we're in the right place at the right time. We've got other exciting news too, Jim. The U.S. Patent Office has published our patent, and publishing it out there gives everybody a chance to look at it and see exactly what chemistries we're using, and it kind of validates everything we're doing. We're still under patent protection in 152 countries and jurisdictions, so it's not like anybody legally can go out and steal our technology. The exciting part of that is, now that you've got this on the table, when you're talking to somebody, even under NDAs, you would never tell them about the exact chemistries that you use. So it was kind of what you'd call a black box technology. We say that we put the cathode material in, and we get 100% of it back. And that makes sense when you think about it mathematically. It's 100% cathode material going in. It's the only material you're treating, and you can get 100% back. And that is, of course, on the pure cathode materials from a lithium-ion battery, where you strip off the cathodes from the aluminum foils by disassembly of the battery. We're doing a pilot plant work right now that we're using other material that has been prepared from a company in Europe, and it does have some other contamination in it. So I'm not sure that we'll get 100% there, but because there's in their methodology, there's other metals and carbon and everything else introduced into it that might prohibit that, but it'll still be in high numbers. And the reason why we're doing that is there's the handheld devices, your iPhone, for example, or your tablets, or any of those take lithium-ion batteries, and they're very high. They're usually lithium cobalt. So there's a lot of cobalt on the table in these batteries, and they're talking about reducing the amount in EVs. But somebody has to go after that market, and it's big. Apple alone spends over $400 million a year on cathode materials for their production of iPhones and tablets and handheld devices. So that's a market we really want to get to. And, I haven't talked a lot about it, but we're testing that type of material. Everything's looking good so far. And, it's a place to capture a lot of cobalt. And, and the fact is that it's probably a little more difficult to gather up those types of batteries, because they end up in the garbage. You see hearing about explosions and everything else, and they're not being recycled. But the simple way to do that would be to give them a trade-in value. It wouldn't have to be much. From your old phone, $25 or $50 or whatever, from your old tablet, around the same numbers, and you'd be able to get these back and in an environmentally and social conscious way. You can recycle those, and that would be great for us. So the publishing of the patent also allows people to realize that we don't have that black box technology anymore. It's out there for everybody to see, that they can see that we're on the right path, and it'll probably hasten any kind of negotiations that we have. Because, as I've always said, we've had a lot of attention out of Asia, and we're kind of run off our feet here answering questions from companies out of Asia on their due diligence on us. So who knows what's going to happen? I mean, something could happen sooner than later, but there seems to be a big rush on in China. They have already got rules about recycling, and now they're talking about building bigger gigafactories in China. LG Chem is building factories, and the list just goes on and on and on. So that's great. We also had a release this week on the critical metals that has been identified by Congress, and we fit into that category very well. And knowing Trump, he's going to want something done about the shortfall, or the United States is dependent on other countries, and in half the cases independent on hostile countries to get critical metals like, manganese is one, cobalt, lithium, and even niobium. We have that, and so we're in the right spot at the right time. Certainly our recycling covers off 3 of those. And you can see that Dan McGordy, who's a valued member of our advisory board, and he's the go-to guy. He's always been the go-to guy for critical metals with Congress. So we're lucky to have him in our camp. So the stock has been doing well. The market cap has increased from about 28 million up to recently here, 36 million. That's a big jump, and that's all in the last week. So we're happy. We couldn't be happier. The AGM went well. We got over a 99% vote for everything that we had, and so that shows confidence from the shareholders, and we're happy to move on, being solid for another year. So that is kind of where I want to leave it off at this point. There was a lot of exciting things. Anyone would make a total topic, but I just wanted to cover them all because this is all happening in the last week.
Larry, where are you traded and under what symbols?
We're traded on the Toronto Stock Exchange Venture under the symbol AMY. We're traded in the U.S. under the symbol AMYZF. We're traded in Frankfurt under the symbol 2AM. And we have a website out there, AmericanManganeseInc.com, where anybody can do their due diligence. And we have you can have my email address, which is LREAUGH@AMYMN.com. Or give us a call here at 778-574-4444.
Larry, thank you so much for the update.
Okay, Jim, that's happy to be able to relate.
I've been speaking with Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on June 1st.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.